So what I'm about to break down for y'all is my full circle strategies mechanical entry model. So it can be used with no context, no nothing. You don't need a bias, you don't need anything. This is just the mechanical entry model within my strategy. So obviously how we find our daily bias, how we get our narrative to align with it, elevates our setups to higher rankings, A plus setups, whatever. Everything has to align. But today I'm just going to show you guys that mechanical entry model and how it was able to catch over 200 points today on NQ. So like I said, all that other stuff can be found in the premium education. So we have the 2 PDFs right now. We have a bunch of other videos explaining the daily bias and building a narrative on the market. And I'm about to show you guys how my mechanical entry model, my full circle strategy, caught this play today. So first things first, you want to be looking at the chart 9 a.m. Central Time. So this new 4-hour candle opens up at 9 a.m. Central. And this will help you guys out too. This is the 4-hour candle, even though we're on the 15-minute time frame. I'm sure you guys already heard of it, but it's the higher time frame PO3 indicator. So just look up HTF PO3. It's by 2 degrees, and I can help you guys get the settings on that. Matter of fact, I'll just pull up the settings on it real quick. So you want to have the 4-hour time frame, obviously match the colors to your chart, and then style, I just have the lines and boxes on. So that's going to help you better see that new 4-hour candle at 9 a.m. or 1 p.m. opening up, so you can form a trade. So the first step, it's not much steps. I'd say it's like a 3-step technical like mechanical model. So the first step is marking out your higher time frame POIs above and below price, because like I said, this requires no bias. It's just a mechanical entry. So our first step is finding our higher time frame zones, preferably a 15-minute zone. But if there is a higher time frame zone that's bigger than a 15-minute, those are also very valid. Just make sure you're using the correlating time frame to whatever high time frame zone you find. So in our example here, this is the 8:45 candle. That's what's showing right now. So before 9 a.m., so you want to make sure you're on the charts 8:45, 8:50 area, that 8:50 macro. You want to find your high time frame zones. So as we see here, we have a 15-minute bearish fair value gap. And then down here, this one was already used, so we'll take this one. We have a 15-minute bullish fair value gap. So as you can see already, no bias. We already have 2 key zones that could be our entry long, entry short, depending on how price plays out. And 1 second here. Yo, Dylan, I'm in the middle of the recording, but I'm gonna unmute so you can hear the rest of it, and then I'll upload the full thing later. Yeah. Okay. So back where I was. So now that you have your 15-minute higher time frame zones marked out to either side, you want to wait for this new candle to open up. So, and by the way, once you have your higher time frame zones marked out and you know where they are, you can drop down to the correlating time frame already. So we know in this case we have our 15 minutes to either side. So we want to drop down to the 1 minute time frame, because that's a correlating time frame to the 15-minute. And after this, literally, let's play this because we want to wait for this. Okay, boom. So we got this new 4-hour candle to open up. So now what you want to watch is, so we want to break down the simple CRT of the 4-hour candle. This is what we're trying to catch. We're trying to catch the expansion of this 4-hour candle. So let's just say theoretically, right? Or not theoretically, this is where the open of the 4-hour candle was, right here. So let's say this is the candle. If we get an initial push up to put in this body, and then reject off this top zone and reject here, then that would put in our top wick there. Sorry, let me get this drawn out. So if we got the initial push up into this zone and then rejected, then this candle would look like this, and then it would reject, and then wherever our TP was, and then it would go up like this, creating this bottom wick. And that's generally speaking the candle range theory for a 4-hour candle. Open, high, low, close, or open, low, high, close. And what you're trying to catch is that expansion of that 4-hour candle. So all you want to do here, that's all we're trying to catch here. And you're using your high time frame zones and the initial manipulation of the candle, PO3, stuff like that in order to catch your entry. So all you want to do here is be patient, just sit on your hands, wait for your key zones to get hit. So let's play price and see how price action starts to form. And as you can see on this push up here, because the candle opened right here on this candle, we got the push up, never hit our zone. So we're not bearish yet, we're not bullish yet, we don't care. We're waiting for our 2 higher time frame zones. That's only where we're interested to operate. So as we see, we continue to go. And this is just simple price action 101. This is basically a concept that elevates the ranking of our setup even more, is we form an accumulation before getting our move into the zone. So then we can get a PO3, AMD, accumulation, manipulation, distribution. So now that we're starting to create this little accumulation leg here. Sorry, that was a bad way to draw it. Something like this. Like we're getting an accumulation. We're in a range. and this is in between our two zones, which is perfect because we can expect for this new 4-hour candle right here, we can expect it to get a manipulation of this accumulation either into this zone and reject, find our entry model up here, or down into this zone and bounce and find our entry model somewhere down here to catch that full expansion of that 4-hour candle. So literally, once you have your 15-minute zones, all you want to do is sit on your hands and wait for this candle to get its manipulation leg into your key zone. So let's wait for that here. We'll continue this a little more. As you can see, we're still staying in the range. And then finally, we break out of this range. So what does this tell us? It's an AMD setup. Accumulation, manipulation, and then as long as price tells us it's ready to reverse, we'll have our distribution. And this is where this 4-hour candle that looks like this right now, like you can see right here, the black candle right there. It's way down there. As long as we can confirm the reversal out of this area with our AMD and our PO3, this is where we can find our entry, and then we can expect the candle to reverse and then set a top wick, giving us the full 4-hour candle, open, low, high, close. So now that we've got this break of this accumulation zone into our zone, we're already dropped down to the 1 minute, so all we want to look for is our entry model. And as far as our entry models for my full circle strat, it's always an IFEG or a CISD. It's harder to explain. I look at retracements, like let's say we break structure or we get a CISD and then retrace to FEG. There's specific times where I'm looking for those. Majority of the time, I'm taking a CISD or IFEG to catch the momentum out of this area because, technically speaking, it's a manipulation, so it should be the bottom as long as, I guess, you formed your trade correctly. So, as of right now, the only entry out of this zone to confirm our entry into buys would be this. Here, let me mark it out with the zone so it's easier to see. This fair value gap right here, you'd want to see that come and get closed above on the correlating time frame, so the 1 minute, or if you wanted to wait for a CISD, either one. Usually whichever one comes first, whichever one's more clean is the one I'll take. In this case, they're like kind of right stacked on top of each other. So what we want to wait for is a close back above those zones. So let's see how this plays out. Alright, as you see, we get another accumulation here, creating more swing highs. We got a failure swing, creating another high. So this is what I was showing some of the members earlier, is that once we form more structure within this zone, these can be taken as early CISD entries, like right here. Once we got this candle close here, get a swing low, get a failure swing, and then close back above that. That can be your early CISD. So if you're I guess not trying to, if you're trying to catch the bottom, like a little more risky, you can go ahead and take your entry there. But I'm going to stick to this original IFEG CISD setup I showed you guys. So let's wait for the close above this fair value gap that we just entered right here to make sure we're not continuing bearish. So let's just play this chart out. And once we get that close above, we're good to go long. There's no reason at that point, after we get the AMD set up, new 9 AM candle open, higher time frame zone, accumulation, manipulation into our higher time frame zone, distribution out of it. Once it's confirmed, we should be good to go to opposing liquidity. So let's see if I can get the close above. Hopefully this is being shown on my screen. There it is. So there's the close. Yes, I understand a lot of people say, okay, this is already a big push up. We're creating fair value gaps on the way, but you got to understand that at that point you're protected, and if we do retest them, you can still find further entry later. So from here, you would go ahead and take your long. With depending on your risk, you can do whatever you want. Mechanical stop would be like above or below this fair value gap here. That's 40 points. So if you're not willing to risk that, then you can just do it under like the most recent swing low from there. And then obviously your TP would be at opposing liquidity, which in this case was some LRL from the higher time frame, which is this level up here. So our TP would be way up here. Obviously that's final TP. You can take partials on the way, but that's about 200 points. And if you took the early entry, it is 200 points. So that's how that would play out. And let's see how this ends up playing out. And this was from today, by the way. Keep this in the middle. All right. Let's see. Boom. So I'm gonna pause this for a second. As you can see, I tried to pause it, but it's pretty much already at TP. But it's simple. Like once all this stuff that I just mentioned adds up and stacks up and looks that clean, it's just, that's why I don't wait for retracements. Like there's no reason to go test that low again after that price has formed, if that makes sense. So what we do is we take our entries there. If it retraces and bounces off this fair value gap, whatever, I'll get stopped and re-enter it at another clean point. It really doesn't matter to me, but that's the mechanical entry. And then I mean, you guys already seen this. I guess I'll continue it a little more. We rip through even past our TP, whatever, over 200 points on the Nasdaq. That's $4,000 per contract on a per mini. So that's basically like the simple mechanical entry model of my full circle strategy. Like anybody can do that, right? I could teach this simple mechanical model to anyone. They could open up the market every day, find it, and trade it. Now, once you start getting more advanced, once you start adding up other areas of my strategy, like my daily bias, how I look at the market, how I develop my narrative, how I read price, like that's one thing I just really slept on is, yes, I have this mechanical model, but no, it's not this beautiful every single day. Like it's not gonna be this clean and beautiful as it was today. But the point is, this is the mechanical model. So it's a great baseline start for you guys. And then as you start to learn how to read price action, learn daily bias a little more, learn higher time frame breakdown analysis, just to like once you start getting all that stuff stacking up, is when just stuff starts to get crazy. I believe there's also S&T at these lows. There's multiple like added confluences, but to give it a quick recap here, I'm gonna give it a quick recap so that you guys can maybe write it down, study it, rewatch the video, whatever you need to do. But here's the quick breakdown. So before 9 a.m. candle opens, right? Let me get this. Let me go replay mode. So I'm not cutting this video. I'm trying to make it more raw footage, showing you guys the full breakdown. I don't want it to seem like too cut up, chopped up, edited. Like, just want to show you guys what I'm looking for. Okay. So let's take these off. And we don't have to take them off. So, boom, right here. 8:45. Sorry, 8:45. 15-minute chart. Like I said, hourly and 4-hour zones are fine. If there's higher time frame, 1 hour, 4 hours in your price, even better. Just make sure you're using the correlating time frame. So if it's an hourly zone below or above price, you want to be operating out of the 5-minute. If it's a 4-hour, you want to be operating out of the 15-minute. But the picture perfect like setup technically is finding your 15-minute zones above and below price, going into this 9 a.m. new 4-hour candle here. So after you have this indicator, you're waiting for that 9 a.m. You're marking out your 15-minute zones. So boom, first step, get your 15-minute zones. Got one here, got one here. Okay, boom. Easy. Drop down to correlating time frame of your higher time frame zones. Step 2, okay, we're dropping to the 1 minute. That's a correlating time frame. Now you want to wait for this new 9 a.m. candle to open up and manipulate into one of these zones. And one of the added confluences, like I told you about this setup, is a PO3. So all that is accumulation, manipulation, distribution. So sometimes like you'll get an initial dump or pump into one of these zones, and then it will just get a V shape. But other times, which is added confluence, is you get an AMD, which is what we got here. So as you can see, we mess around for a little bit, form an accumulation leg. So then what's happening here? We form an accumulation. Once we break out to either one of these sides, people are selling, or buying. So in our case, everyone's selling. We just broke this accumulation. Everyone's selling, but in our case, new 9 a.m. candle, we're playing the open, low, high, close, candle range theory on it. We get the accumulation, we manipulate below. Everyone's trying to go short, but we know that this is a key area for buyers. So then now all you wait for here, you got to your zone. Everything is good from here, but you can't just go long. You got to wait for the final step, which is an IFEG or CISD to confirm the reversal, and then you can target opposing liquidity to catch the expansion of this 4-hour candle. So I already showed you guys the rest of this. All you want to wait for is the IFEG. So in this case, it would be a close above this. And then also we formed that CISD here, which it closed there, which would be your early entry. But let's just say you take the original IFEG, like I showed y'all earlier, you would get the close above it about shit. Oh, sorry, excuse my language, but okay, I just messed it up. But you know what I mean. I just showed you guys that same example. If you want to see how it played out or whatever, you can go rewind it again. But that's just the simple mechanical model of my full circle strategy. That's the mechanical entry model. So what I want you guys to do actually, as you start to understand this, is start to request some more videos on what you want to dive deeper into. I'm going to try to like give you guys a full breakdown of exactly why my strategy has had a 90% win rate these past 2 months and has around a 70% win rate since I've started using it. I want you guys to request what you're struggling with, what you want to class over, stuff like that, and I can start to get more classes like this where we dive deeper into the strategy. But like I said, this is a great start, a great mechanical entry. It's the same thing every day. You can look for it every day. It might not be there every day, but it's something consistent. right? It's not, there's no guesswork. It's like, oh, there's a FEG here, there's this here. Oh, my daily price, I don't know if it's long or short. It doesn't matter with this model. This is my mechanical full circle strategy model. You can use it any day, look for it any day, and see how it plays out. As you can see today and these past few months, it's been working incredibly well. So I want you guys to check it out, study it up, and see how it goes for y'all.